NQ's kind of looking good here. $74.40. $74.40. $74.35 now. This is huge on NQ. This is not a real edge of node. Yeah, today feels like one of those days where I just kind of try to buy the dip numerous times and then just get killed in the process. There's 2 levels on NQ there. This thing is just running down. I don't see anything really slowing it down until 74.20. The straddle was around 50 points. $7,400, $7,500. What's interesting here is that we started getting decent support at around 7,400. 7,420 is kind of like the first stop. If we should head there. $7,400, yeah, 7,400. Yeah, 7,400 does seem like a first stop type of thing. $7,400 SPX, but that's like 30 points lower. So I don't know that we're going to actually head towards there. I think NQ just swept, right? Yeah, NQ just swept there. Where are we going to go, though? Question. I would like to see 28,400 on NQ, at the very least. YM's, of course, pumping. Make this harder. I'd love to see a move 7,400. Yeah, YM is just moving upwards. Just hit this up in the daily. Yeah, I think we wait for 7,400. Maybe maybe that's like the sweep node reaction type of thing. Or NQ might go right now, I guess. Because why not? They're making this so hard. $7,430. $7,430 was a low there. I'll be watching NQ though. Yeah, interesting volume on NQ there. Very interesting volume on NQ, but yeah, and ES is on a rocket. Holy cow. Yeah, NQ's got a little bit more, just from a volume profile perspective. That's what I believe anyways. Yeah, NQ will be hard though. I think NQ is going to be tough. Just want to see how far back mine goes. This goes all the way back to, all right. So volume profile looks okay. Yeah, we're currently at the node right now. So we could get a nice spring between here and 400, I think. It's very possible. If we do want to bounce, I would think it would be coming within the next like 20 some odd points on NQ. If we're going to bounce. It's an ugly 5-minute candle though on ES. What sucks is this thing can go as far as like, and there's not much here in terms of volume. It's going to be a tough one. Where are we at on SPX? SPX is at 74.34. I thought ES would get to see 7,400 on that NQ move down, but we didn't get to see it. Yeah, it's a little too risky to do anything right now. YM is still on a rocket ship. Amazing. 75.50 here is like a big resistance spot. Make it above, then we're good. I think that was a divergence though. Good bounce so far. We're making this real hard though. Back at 74.50. Move from 74.30. VIX is coming down a little. Bounce at 74.50. Rejected, came back. Boom. What a crazy move. I ultimately would like to see it run all the way up. But I feel like this is too early. Eight minutes left on the 1 hour chart. Oh, we're moving up pretty good here. Pretty darn close to VWAP. I have no freaking clue what's happening today. Don't ask me. It is OPEX though, right? It's July's monthly OPEX. So there was an AM expiration that expired, that I guess pretty much closed 74.50-ish, around there. Something close to that, I would think. Maybe 74.40. I'm not certain, but there's VWAP. It's like not really respecting many things here. VIX is still dropping. Yeah, that 1 hour candle is going to close massive bottom wick. It's got a few more minutes on it, but I want to see if I can pass some of these accounts in this mess. But this is really tough to navigate though. Massive bottom wick. Holy cow. Might have been just like an SMT divergence on a higher time frame. Unless we're coming back down, but But yeah, that was a good sweep. I didn't see anything set up on the 1 minute though. Definitely nothing I liked on the 5 minute. It would just be like a knife catch and prey type of thing. Yeah, this is gonna close very bullish. Check to 74.30. It's amazing. I think Alma's buy was somewhere around there. Yeah, she wanted it 74.50, 74.60 on ES would be her last buy the dip opportunity. $74.50. I think we only got to $74.70. Wow, what an amazing move. And it was off that it was off the NQ. See, look at this. I was looking at this and I was saying like, oh yeah, around 28,400, 28,440 would be a decent opportunity to buy, I think, on NQ. And what the heck? There it was. It's like the only price range with volume. It's about 10 points shy from 400. But that was like its last opportunity to bounce. Unbelievable. And I didn't get it. That was only like 270 points. Okay, there's a 1 hour close there. Watch this, no pullback. It's just going to be straight line. Yeah, don't expect a pullback. This is insane. This is going to go to right to like 500. It's amazing. But maybe, do we stop here around 74.80 first? Yeah, just based on 4 hours, 1 hour, 30 minute, 15 minute, up is the move. It's just that you have to adjust your stop loss accordingly. Which is kind of insane, right? as much as I want it to pull back so that we can play some longs, this is going to be tough. Okay, target is magnetic. Target is at 75.23. Pivot needs some volatility in order to break above that. The pivot's at 8.6, so we're pretty close to there. And the volatility definitely has volatility. And customers do expect, one thing that Alma noted is that customers expect 74.70 to 7,500 into the close of today. But what's insane is we're already here. What was the news? Sentiment? What a move. I'm contemplating, I'm going to try this on eval for sure around this upside pivot here. But I'm contemplating whether or not to take it on a funded account. I don't think this is going to be a good one because volatility is here. We pumped all the way to 1950, so we got a lot of room to kind of pull back on the VIX, which means an up move on ES SPX. It's hard to see a pullback today because I've seen days like this play out before and then we just rocket back up. Yeah, it's just like, this is tough. We're also kind of at like an edge of a volume profile, or not volume profile, breakdown by strike, which is dealer positioning. 74.85, 74.85, 75, 74.90. So it seems like a decent spot to kind of like slow down here. But what I'm not certain about is, do we get a rejection and right back down to 74.70? On SPX? Or do we just kind of stay here and hover around here until it's ready to go with minimal pullback? And today just looks like one of those minimal pullback days. Yeah, this is one of those minimal pullback days. We're almost back at the straddle high of 7,500. I think things will slow down here at 7,500. 7,505 is going to be hard to break through. But I cannot believe I did not take the NQ long there. It was like the only HVN in the area. You had a 40-point HVN. Could have entered anywhere in there. Yeah, after the that swing low on a higher time frame, got taken out at 28,520-ish. Then you have this naked POC, and this naked POC is the one that essentially created this high value node. So entering here was a reasonable probability for a bounce up. So let's see if we start seeing some sort of pullback around here. Where are we? 74.90. 74.92 was a high there. And that is where things should start slowing down. Around 74.95, 7,500 SPX. Yeah, NQ is also pulling back, which is interesting. Looking at the speed, it might close it. Yeah, I'm giving it a reasonably high probability for a close in the green today. Like potential gap fill on SPX. Yeah, it looks like things are slowing down a little here. NQ is kind of pulling back. YM is still going. YM just took out its high of day. Amazing. And it's still pushing. Did I say things are slowing down? Doesn't seem like it. But yeah, that bounce on NQ, man. I should have trusted that a bit more and just laid it out. A little bit of SMT between ES and NQ on the 5-minute here. We'll see if NQ can catch up before the candle closes. Yeah, that positive gamma area. That positive gamma area between here and 75.20 on SPX. So I would think things start slowing down. NQ maybe around 920, 28,920. Maybe 964. So I'll watch those areas. But yeah, we've seen these days before, eh? And Q sharp would be nice here, but not high probability. Yeah, I know. I know what you mean. Yeah, everything was pretty bullish. Like when you look at the 15 or 30-minute close, 1 hour close, 2 hour close, 4 hour close, everything was like massive bottom wick, big volume. And just the way that today kind of, like we've seen days like this play out where we just tanked, and then for the rest of the day, we just bought up with no real pullback. Let me show you the gamma chart. So there's massive positioning at 75.15, 75.20. You can see some of it coming off here. This feels like a pullback into the 5-minute ADMA at the very most. But nothing I'm willing to risk a funded account on. But yeah, there's like that pocket of positive gamma influence here. That should slow things down. And then obviously the negative gamma that starting to rise up. Gap fill would be at 75.34. But yeah, just based on the positive gamma pocket, I would think, and positive gamma positioning that you see here between 74.95 through to 75.15 with some negative gamma at 75.05. And it's still like 1,600 positions there. And I wonder if they're long calls. $75.05. Yeah, majority of it is long calls, but there was a portion of it that was long puts by customers. So there's some people betting on both sides. But that creates like a negative gamma impact, a localized negative gamma impact. In this, they're just selling premium here. Selling premium 75.15. Yeah, selling. Ooh, it's short put position. Interesting. Customers are short put here. Wow. Okay. So whoever's sitting in this position right here, 75.15, 75.20, that massive 6K, 8K positioning, well, 6K and 13K positioning, they're expecting the market will close above it. But this was not an intraday position by any means. This was here. So this is the daily view. This shows previous day close. And yeah, it was, this is it. ODT positions here, 14K in sizing. And they happen to be customers that are short put spread, I believe. No, wait. Give me 1 second here. Let me think this through. If these are puts, no, they are not short put spread. They are actually long puts. Long put spread. So they were betting on downside, and then they took some off. They took some of the long puts off. They kept the short puts in place. Okay. Yeah, they're betting on downside. Whoever it is. Initially, I thought they were short call spreads. But if the market, if I believe if strikes, if the SPX moves above this level, this guy will start puking his position. And if he pukes his position, then we're likely gonna go up. All right, give me 1 second. I'll be right back. Just gotta get some water. Right, I'm back. Looks like there's a little bit of SMT here. NQ made a slightly higher high, but ES did not. So it looks like you're getting that pullback towards the 5-minute ADMA there. Nice 15-minute top wet candle there on ES. I just don't... Yeah, I'm not certain like how far this thing will go. Hey, Koshik, what's the watch count on your end? Curious if there's other people here, or this algo's playing tricks on me. There you go. There's the pullback. Gotcha, okay. For NQ, maybe a good target would be the POC, which is hanging out at around 754-ish. For ES, it's hard to say. Like the 5-minute ADMA, if we're gonna continue trending up, we could hold the 5-minute ADMA. But I mean, best thing to do is just take profit along the way on these high volatility days. VIX actually revisited its overnight lows, and from there we've been kind of pumping back up on VIX. Yeah, if we're lucky, SPX would run down another 15 points here. So that's just based on the negative strike cluster that I'm seeing here. So from 74.90 down to 74.70, assuming we can get past this 74.85, which is like this large hump here. $74.85 pretty much coincides with that 5-minute ADMA. Yeah, whoever put in this put spread here what has been in it. And maybe it's like some sort of hedge, but the fact that they did not take it off when SPX and ES was at its low of day today was insane. Like I noticed that they took off more than half of their positions. So the position started its day off at 14.5K in sizing. And they took off, what is that, 7K? About 7K positions. And but they only took it off on their long puts, which makes sense. They took about, let's say, half off at their long puts. So that was their way of collecting profits. And then this zone here still acts as like some sort of a traction zone, with 75.15 being its like heaviest. And you can kind of see that positive gamma effect up here. What was our high of day? High of day was 7,500. Okay. So far that was it. We're still hugging the 5-minute ADMA here on ES and NQ. So that's holding it as support. And Koshak, I just saw your like, I'm just looking at your trade here, and it looks like you took it on NQ. If had you see that, that's the funny part, right? Had you take it on ES, the movement was pretty limited, but it wouldn't have swept you out, right? Because of the SMT. And this is like an ongoing battle that I have with SMT divergences. And you know how you always say, I'm going to go long off the low resweep. And then oftentimes there's enough times where you do get it, and then there's times that you don't get it. And yeah, it's hard to know which one will resweep and which one will not. Which I guess, in theory, we should wait for the SMT to occur. Well, at least that's my trade strategy. There's times that I get in a little too early too, and then I get killed. And you've seen that happen to me numerous times. Okay, let's see if we can revisit 920s here. Watch that 920 level on NQ, and then maybe 960. Either or. But right now it looks like we're going to get a decent push up towards 75.15. It's more SMT. I would have really liked to see 920 there. Yeah, so one of the cool things about that position there, 75, 15, 75, 20, if once we moved under the 75, 20, from a hedging perspective, dealers have to sell into that move because of, well, essentially, it's a negative gamma influence in theory. So dealers become short delta and have to, or they become long delta, I believe. So they have to sell delta, which is why you get like a cascading move. And then as the price approaches it, they have to buy back all that delta, which is basically the negative gamma that we know, negative gamma influence that we know of. So that's why we got such like a V-shaped kind of move, you know? That move down, dealers hedge by selling. So there's just no buyback up and it just keeps on going. And when did we move below 75.20? 75.20. Yeah, we started moving below yesterday. And then we just continued lower and lower. I mean, you got some bounces, but ultimately we ended up at 74.30-ish today. And then as price moved back up, the dealers had to buy back delta. So they basically have to buy futures during that move, which is why you end up getting that V-shaped kind of move. So like simply said, we're negative gamma. And when price moves up, dealers have to hedge by buying futures, which is why we ended up having this nice V-shaped recovery. So pretty decent SMT. Yeah, now that we're back in like this positive gamma pocket, we're grinding it out now. So negative gamma influence, and you get like this V kind of move as dealers and price action move in the same way. That's the simple way of saying it. And it's all basically influenced by this 75.15, 75.20 positioning. which is a customer long put spread. Oh yeah, no problem, Koshik. Yeah, let me know when you're back. Hey, don't hesitate to say hi if you're new in this channel. Also, don't hesitate to ask any questions about what you're seeing. Yeah, so if we should move up above that 75.20 level, where this guy starts puking his positions above 75.20, maybe they start puking their positions. Now dealers will end up buying, which essentially creates like support and an accelerant kind of flow to the upside. Should we move? Should this guy starts puking his positions? Like he's already closed out half of his puts. Yeah, here it is. Oh, no, sorry. He did not close half of its puts. He's still hanging on to it. My apologies. Somebody else just added 7,800 calls, long call positions at 75.20, which is why you're seeing the net impact of it. So the guy that's holding 14,000 customer puts, customer long puts, which is betting on downside, is still hanging on to it. Oh, it's not too much of an ass at all. Yeah, like this is the whole point of the channel. I think we're all here to pretty much learn from each other. So I really appreciate you asking the question. Could you briefly explain the relationship between both charts? I haven't seen anything like this before, so just curious. Just understanding option Greeks. Yeah, so I assume you probably found this channel by typing in GEX on through the search of YouTube, correct? And if you did, what you're actually seeing is GEX on the left side here. This is gamma exposure, dealer gamma exposure. It's not as simple as a lot of the services you might have seen before, where they have a single line that says 0 gamma, and they have a few other lines that says certain gamma influences like put wall, call walls, and things like that, right? But gamma is a bit more dynamic, and you can kind of see over time it changes based on what the current positions are. So what you're seeing is an ODTE, 0 DTE expiration gamma influence for the most part. The blue that you see is positive gamma. So this blue area here, that's all positive gamma as positions start unwinding a little from this morning. And then the red that you see is negative gamma. And you've probably, if you're familiar with GEX, you've probably heard of like, quote unquote, a gamma flip, right? Which basically means positive and negative gamma levels. So here you can kind of see the gamma flip, or gamma, zero gamma, I'm going to call it zero gamma, is this dotted line here that you see. And that negative gamma is influenced by these 0 DTE positions on the left side. And these are either long calls or long put positions. And customer long calls or customer long puts. Wait 1 second here. Positive gamma, low volatility, negative gamma, more volatility. Exactly. When you're in positive gamma, you can see it as like a high liquidity zone, which means in order to get through it, like you really need to grind it out. Positive gamma, oftentimes people know it as when price goes up, dealers sell futures in order to hedge. And when price goes down, dealers buy. So they basically do the opposite of what the price action is doing. And in negative gamma, dealers move the exact same way as the market. So for instance, in negative gamma, this morning, we were actually hovering in negative gamma. You can kind of see like the reddish hue here as we climbed up. The positions have since changed, which is why you see like a lighter or a whitish kind of position / blue. And that's because the positions are becoming more and more positive. So customers are starting to sell puts and calls. So let me if we're talking about the breakdown by strike, the table that you see here, the left side of the table is dealer short positions, which have a negative gamma influence. The right side is dealer positive positions or dealer long positions, which have a positive gamma effect, which is what you kind of see here. If you look at 74.95 through to 75.15, 74.95, 75.15, this is the influence. This is the positive gamma influence, which is why we look at these positions from an ODTE perspective. And then the negative gamma kind of starts at negative at 74.90 SPX, and then runs through. The influence runs through, but you still have like tiny pockets of positive gamma here that you can kind of see at 74.60. But generally, there's more negative gamma positions or negative dealer positioning. So if you think about it, negative dealer positionings is basically the opposite of customer positioning. So you and I, if we're betting on the market to go up, we would take calls, right? We would buy calls. So that's a long call position. And maybe we buy it at 74.70 and we buy 1,000 of them, which you see here, the latest value is 1,000. And maybe that's us, right? You bought 500, I bought 500 SPX, 74.70 calls. On the breakdown by strike, which is showing dealer positioning or market maker position, the market makers have the sum of both of our positioning, and they take the opposite end of it, right? So we buy, which means they sell. And when they sell, it creates a negative gamma impact on the market. So that's why you're seeing 74.70 here. That was like a hypothetical scenario, obviously. But that's essentially how this works. And then this can be long calls or long puts, by the way. Customer long calls and long puts, like you and I taking a put and a call. If I'm betting on downside and you're betting on upside, it'll look the exact same way to the to the dealer. The dealer will see it as a negative gamma position. So any customer long calls or long puts have a negative gamma impact. Correct. Yeah, exactly. Exactly. The opposite of ours. Sorry, I'm unfamiliar with how much you know, so I'm just kind of spewing stuff. So stop me if you need to. Just thanks for asking the question, though. And positive gamma is really generated by customers selling positions. So we can be selling calls, we can be selling puts, and we're collecting premium on those, right? So if we're collecting premium, the dealers and market makers end up being long those positions, and long those positions is long gamma. So which long gamma is positive gamma. Which is blue in just what you see. So the two, the breakdown by strike and the gamma, are directly linked. And on the far right side, this I don't use as frequently as maybe others would. Yes, these are net positions for each strike. That is correct. And then the charm on the right side, I find that generally it comes into play in the second half of the day, so like the afternoon. And you can kind of see in that little square bubble that pops up, and it shows you the charm reading at, right now it's sitting at around 2, 3, 6. It's less than 10. So in order to figure out from a charm perspective how many futures the dealers essentially have to buy or sell in order to hedge every 5 minutes or so, you multiply that charm value by -2. And right now they are selling. So in the orange area, the orange yellowish area, we consider that to be suppressive charm. And in the blue area, it's supportive charm. So the blue areas have like a positive flow, like dealers would have to buy in order to hedge their books from a charm perspective. And then the in the yellow area, dealers have to sell. So generally yellow is suppressive. it doesn't mean we can't go up in the yellow area or we can't go down in the blue area. Especially here because the charm value is really low. But once you get towards the second half of the day, so maybe like after 1 p.m. or so, you start getting higher readings driven by certain strikes. So here you can kind of see, oh wow, like at around 2:43 p.m. New York time, and at a strike of 74.27, customers have to sell 200 futures positions or 200 futures contract in order to hedge their books. So now it's starting to have more and more of an impact because the reading is higher. And as we get closer to the end of the day, it generally reads a bit higher. But I don't love it. I don't know how accurate it is, but it gives you like a general idea. Some people swear by it. I personally just use my breakdown by strikes and the gamma position, or the gamma heat map, if you will. Yeah, I would generally look at charm towards the end of the day, like in the afternoon. Okay, this is a decent pullback here. So I think we were initially talking about if I think it was like 15-20 minutes ago, maybe we were looking at ES position at around 10:30, 10:35, and we were hovering around 74.90-ish. So I was saying if we can get through 74.85, we're probably going to visit this 74.70, 74.65 area. And it looks like we're there now. And typically I like to look at these clusters here. So when there's a nice clustering, oftentimes we like to respect these clusters, and it takes a lot of effort for the market to kind of push out of this cluster and into the next cluster. That's what I find anyways, just from my experience using this. What do you generally trade? Are you trading like futures? Are you trading options? NQ, ES, SPX, SPY? Just curious. Yeah, that's correct for charm. You're more of an NQ trader? Man, I've been killed so many times by NQ that like I have PTSD. How do you what do you normally trade on NQ? Like what's your like rough entry model? Or do you use like an indicator of some sort? Like how do you typically enter? Or what style do you trade? Yeah, I'm a huge fan of ES. I mean, I've seen a lot of people very successful with NQ, but it is extremely volatile. Like there's certain pockets that I wouldn't mind trying an NQ trade. And like today was one of them. And that was on NQ. And there was a naked POC here on the 1 hour. And that naked POC was from, I think, like May 5th. And that naked POC created this little node here, this high value node on a volume profile perspective. And I thought this would be the spot. If we were going to try to go long, this would be the spot. Anywhere between 28,400 or 28,440 would be a good entry long. I just thought there would be a better opportunity, and I didn't want to knife catch it there like some of the NQ traders like to do, but it would have been a very nice knife catch. Nice. ICT, yeah, ICT. We use a lot of those principles here. I think we reference IFVGs here and fair value gaps, volume imbalances, SMTs. I love a good SMT trade, like the one that came up just at the highs here. Yeah, there was like a nice SMT trade between around 1040 and then 1015 highs between ES and NQ. Still not confident enough. And someone told me about GEX. Oh man, like I'm a huge fan of GEX. I think Koshik will probably tell you that how much I'm a huge fan of GEX. But there's certain GEX that I like and there's certain GEX that I don't like to use. And I've tried them both. I used to use like the very simple version of GEX, which is the 0 gamma or gamma flip levels, whatever you want to call them. And they generally get adjusted throughout the day. And I learned things from a guy named Vol Signals, and you might have seen it on him on like Twitter, YouTube. And he's the one that calls the simple version of GEX the cheapest version of GEX actually, because the more the products that do cost more have like the more the smarter version of GEX. But the cheaper version of GEX like generally costs anywhere between like 20 or 60 bucks a month, maybe even 100. Vol Signals calls it naive GEX, and ever since then I've been calling it naive GEX. And it's not as dynamic as what you see here on this chart. And this GEX here is Vol Signals calls it smart GEX, and ever since then I've been calling it smart GEX. But it's really just the difference between the two is how they net out the strikes. So for instance, the 7470, if I pop this up, see 7470, no, sorry, that's not 7470, 7470. So you see here it's dealer short calls 372, and dealers short puts 1,045. So the total is a dealer negative position of 1,400, right? And on top of that, it's a customer long. So we know it's a customer long calls and customer long puts. That's how smart GEX is calculated, based off of knowing that. Naive GEX, yeah, your chart is so different from, yeah, so spot gamma, I've actually used spot gamma before, and they do have naive GEX. But more recently, ever since OptionsDepth did their thing and came up with their own gamma profile, I believe spot gamma has since added that to their services. I don't know what it's called, but I remember Brent was pumping it on Twitter. But yeah, you're right. A while back, I used spot gamma, and I just couldn't find any real consistency in how I read the spot gamma GEX levels. And on top of that, he was charging quite a bit of money for it too, because there's a few other things in his services. But yeah, it definitely was naive GEX. And I think the way naive GEX calculates their strikes is calls are long positions and puts are short positions. I think that's how it there's some GEX calcs that are that simple. Like, it doesn't differentiate between a short call, a long call, or a long put and a short put. Because there's like 4 different positions you can take for one strike, right? But based on the naive GEX, there's really only 2 positions. It's a call or a put. So that's why naive GEX is naive GEX. So like, for instance, a position at 74.70, we were saying it's around, I think it has since adjusted, but so let's say we were saying it was around negative 1,700 positions from a dealer perspective. Customers are long 1,700 positions there. Whether it's calls or puts, it really doesn't matter. It has the same gamma effects. But if you were to do it from a naive GEX position, it will show you the difference between the two, which is like 600, right? And it'll show you negative 600. So maybe it's not completely off there, but it's still showing you a negative positioning. So it's not too bad. But there are going to be times when it's incorrect, right? Because it will end up showing you maybe there are more long calls there than long puts, and then it'll show you a positive positioning there, which becomes a problem from a GEX perspective. Because now you think, if it's a positive position, you think it's positive gamma, but it's not. Based on the call and put differential anyways. But yeah, I think OptionsDepth was one of the first ones to come up with this this GEX, and Vol Signals was a market maker back in the day, and he was looking for a service that was available and found OptionsDepth to be the closest thing to what he had as a market maker. Vol Signals has since basically created his own platform called VS3D, showing something very similar, and similar colors. But the way that he calculates calls and the way he calculates his positioning is slightly different from OptionsDepth, because the two I find vary every now and then, and they're always like these. Let's say you might see this position here at 74.65. He makes a few other assumptions in his calculations, and maybe this 74.65, instead of a reading of 223, he has a reading of like 3,000. And it really depends. I personally think that the vol signals one is more correct because he was in market making. But I've used OptionsDepth. They're more cost effective, still pricey, but cost effective than VS3D, and it's good enough, I think. Like this morning, we saw a negative gamma move up, and then it slowed down exactly where all the positive gamma positioning is. And then from there, that's when we moved down a little. Two components are missing. Yeah. Yeah, I find that no one's really showing this gamma chart on YouTube, and no one really shows how they use it on YouTube intraday. I use this gamma chart, but it's not the only thing that I use. I often use volume profile, some ICT concepts, or maybe some entry models, like seeing the SMT, for instance. That would be a good one. I already showed you how I would have entered for volume profile, and what I generally look for is like an edge of a node or a peak of a node or potential reversals, but I didn't really see anything on an NQ basis or a long up besides a knife catch at that level. The thin lines in the middle chart, are those the initial positions, and thicker bars are the current? Yes, exactly. Yeah, 100%. This is what it used to be. So the start of the day, it was at negative 2,300 positions, I guess. And then it moved way out over here. Yeah, like for instance, if you're looking at 75.20, you can see the start of the day was like 14K positions, negative 14K positions. And then it dropped to about negative 6,800. So about almost half, right? Half of it's gone. But I was thinking that whoever had these put spreads, so these are actually put spreads, you can kind of see them here. So the 14K sizing was yeah, the customer was long 14K positions at 75.20, and then customer was short 14K positions at 75.15. So it's a long put spread. But I made the mistake of thinking that they closed out half of their long put portion, only to come here and look at the calls that got put on. So someone intraday felt really bullish and they put on like 7,900 calls there at 75.20. So they're expecting a breakout of 75.20. If it does break out, I think this guy pukes his position. And if he pukes his position, dealers have to buy back all that delta that they sold. So it's going to have like that negative gamma effect, which means above here, you're going to see price action move up. I'm curious, have you took any setups today or seen anything today? Or is today one of your like kind of research days? Exploring YouTube to see what you can find and then ended up here. Yeah, that's pretty awesome. I feel like you end up in the right place because Koshik's another regular here, and him and I have been like working on evals, past some, and working on payouts. I do have a live account. I have a few funded accounts. I have received payouts before. But it took a number of years to get there. So then on top of that, kind of noticed that no one really talks about GEX, like smart GEX on an intraday perspective. So I thought maybe I would kind of stream and work on my speaking skills too, just to kind of push the envelope a little. No positions for today. Just looking to learn more. Take us approach. For your 7,500 setup was tempting to go short. Oh, you were here for the 7,500 to go short? Yeah, I probably should have shorted. I did not. Yeah, don't if you do end up coming back, don't, or if you're back every now and then, don't hesitate to say hello, because I really can't tell when people are in the that if someone new is watching. I can't even tell when Koshik gets here, and he's a regular. He just drops a hello every now and then. So that's what I personally believe. I do believe without Gex, I'm trading a little blind. Especially if trading SPX. But there are times, actually more often than not, you'll find that the positioning on SPX reflects key technical analysis areas. So for instance, I don't know, let me see here. Let me take a quick look. Like in the past, I would see maybe some trend line and there's happens to be positioning there. like relatively large position relative to the rest, or a key spot like a gap fill, for instance, or a very specific liquidity low, like maybe some FOMC low, and it's very supportive there. And you oftentimes see the positioning reflects that. It's like, hey, there's guys that are selling at the FOMC lows, and they're selling premium there because they don't believe that S&P will actually drop below that level and hold. So they sell premium there, and they're collecting premium, like money, as long as price stays above that level. Yeah, like today, for instance, it was negative gamma, and we got a V-shaped recovery. And with no pullbacks, and it was so hard to enter. But in theory, like, it's one of those buy somewhere and just shut your eyes and hold, right? And Koshek had experience with the naive Gex too. And I think his findings, like, he used to use it more religiously, right, Koshik? And then I don't know if you use it now. I don't believe you do. Okay, so now it's 11:30. There's this thing called an XYLD trade that I typically always think of at around this time. So this morning we bought up. Yes, I was thinking maybe we wouldn't buy up until after 11:30, but damn, it's going way too fast. I really wanted that. But the XYLD or the QYLD trade is basically, I think it's a portfolio. I forget who manages it. I kind of purged that information from my head, but what generally happens on an XYLD trade is, I think it's like a covered call strategy. And what they do in that portfolio is, on the third Friday of every month, they basically roll their positioning. And when they roll their positioning at 11 o'clock, they decide what strikes they're going to roll it to 3 months out. And oftentimes the market, if the market is weak, it's normally weak in between like that 10 o'clock to 11:15 kind of range. And then what happens is it buys up at 11:30 because of the roll, which we're starting to see right now. Yeah, it's kind of like the JPM caller. But the JPM caller we can't see anymore because they started using some other, they started hiding their position basically. And they don't do it directly on SPX anymore. It's like an SPX equivalent. But yeah, it's a portfolio or a strategy that basically there's like a white paper on it that tells you exactly what it's going to do, and they do it every single time. And sometimes people try to front run it. But oftentimes, so the way I look at the XYLD trade is it's generally a bit supportive, like at 11:30 through to about 1 or 1:30. So if the market wants to sell off, maybe it sells off slowly and almost like a grinding fashion. But if the market wants to go up, it exacerbates the move, like because the flows are positive from that positioning, from the XYLD trade. And it happens the third Friday of every month, every single time. But it's not all the time is it obvious to see. So that's what makes it tough. Because the market has many other flows. Like one thing I wanted to note is that I know you said that it's like trading blind. I would say with GEX you are less blind, but you're still missing a number of other flows in the market. So like dealer hedging flows is not the only flow, right? And I've said this a number of times, and I've learned this from vol signals. I've learned this from OptionsDepth. Yeah, GEX, like this is not the only flow. It like Koshik said, it's good to understand what environment we are in from a gamma perspective, and from there, you can kind of figure out how you'll hold the trade or how you enter a trade. But it makes you less blind, at least. Then you have like TA. I prefer volume profile as like my key spots for entries and possibly exits. I'm very discretionary on how I trade. All right, take it easy, Koshik. We'll see you on Monday. Oh, there's tons of other flows. Ones that we don't even know of, right? Like, I guess your best bet is trying to figure out what those flows are. Like for instance, today's XYLD trade. Yeah, and a lot of the flows guys, they try to use dealer hedging flows, which is what I'm essentially using here. But they also try to add on like maybe CTA flows. Other flows like the XYLD trade, for instance. But there's always things that are happening intraday or on a daily basis. But yeah, it's impossible to know all the flows, unfortunately. But knowing some of the flows could give you a reasonable advantage, right? Dark pool. Yeah, I don't know much. Like I don't want to speak too much about the dark pool. I don't know too much about it. I remember trying to use unusual whale. It never quite stuck for me. But yeah, dark pool is definitely another flow. I don't know if you can predict those flows, but the gamma stuff works reasonably. There are environments where the gamma stuff doesn't work, and it's because dealer hedging flows isn't the dominant flow. Like in a negative gamma environment, it's really tough. Or a high volatility environment, very challenging to use the breakdown by strikes. Like, remember how I was talking about the clusters? It doesn't cluster as much, and using that could basically really mess you up. But I want to see if this can climb up here. It looks like it's going to be slow. There is like another service that I use. And so on top of OptionsDepth, I do use, I don't know if you have a Twitter or have encountered someone called Alma. She's pretty good. And she predicts a lot of these other flows with options Greek, exactly what you mentioned earlier. And a lot of times when trying to predict these Greeks, when trying to calculate the Greeks and predicting it, it's hard to model it. There's so many different ways to model it and which theories to model it by or follow. But she seems to have a very good take on that. And I remember coming across one of her tweets and I was like, okay, she used dealer hedging flows. She also uses a bunch of other Greeks that I'm unfamiliar with. And the whole idea is to help paint the picture on where we might slow down and where we might speed up certain moves. Like, there's some environments where you hold a trade, you're going to get knocked out, break even, stop loss. And then there's certain environments where once you're in the trade, it's never going to see your stop loss ever again or your break even point ever again. And it's nice to know roughly those levels, right? And where we might reject and stuff like that. And I really like her service as a result, but it's really just a Substack service. Oh yeah, we're really going up here. Yeah, it's a Substack service, and initially it was like very cost effective. Like, I think it was like 35 euros. I'm not sure what it costs anymore. I'm a mathematician physician. Let me double check. Yeah, she is a mathematician. She's insane. Yeah, that's the one. Quant trader. Yeah, that's like 10.7k followers. 52 euros. Yeah. She said she increased the price recently, or not recently, like as of like last year or something. But it used to be 35 euros. And yeah, it's like, don't get me wrong, like I do talk about her report a lot. So if you do drop by, like you'll hear what I say. And I'll say hey, this is from Alma type of thing, or this is from Vol Signals. I will be discontinuing Vol Signals at the end of the year because they're really pricing it up. I think it's jumping from, it used to be like $50 a month USD, and then went up to $89 a month, but then he's gonna pop it up to 300. So that's too rich for my blood. I'm uninterested at that point. And on top of that, that's just his Discord service. On top of that, he has his platform, which is another $300 a month, which is insane. So far, it looks like we're trying to push up here. Oh, sorry. I think you said something. Sorry. One more question. What are those green and yellow lines on the gamma chart? So those green. Okay. I think the best way to explain this is to show you the 3D chart. If you think of these charts in 3D, the gamma peaks are green, and then the gamma troughs are yellow. So the best way is I'm going to show you it on the daily chart. Because the daily chart I find is the best. So there's you can see 75.10, the influence there. Or I think it was actually 75.15 position, that really large positioning we were talking about earlier. That causes a peak gamma effect. So this is peak gamma, the darkest blue spot. But as you come out like towards noon, the effect of that positioning at around noon, it occurs at around 7,500. And then the gamma troughs are basically, they're like, they're influenced by the negative positioning. So the 75.20 that you saw earlier is if you think of it as like a 3D curvature chart, this is the low point. It is your trough, and it's caused by negative gamma, which makes sense because negative positions create negative gamma, right? So what I'll show you is the 3D there, and you can see how it looks like. So what you're seeing is a 2D heat map, which is trying to show you something that's in 3D. This here, this 75.20, this is 75.15, sorry. That's the positive, the large positive positioning. You can kind of see there's like this influence here, and that's the peak. And that's its influence like at the beginning of the day. I think I can actually zoom up. It's hard to really see the curvature of these like these waves, right? You can kind of see this wave tops off here. And that 75.15 is directly influenced, like the peak is like somewhere around 7,500. And then the troughs, you can see the troughs are kind of like, are the opposite. They're down here. And they have like a negative gamma effect. Yeah. But I can't see much with the 3D chart. So like if you can kind of like interpret the heat map as that, like what you'll see is oftentimes on the daily chart, the daily positioning, sorry, brain fart. But you can see the daily positioning often has some sort of influence around these troughs and peaks. So you can kind of see like over here, we kind of topped at 7,500. I know the peak is showing at like pretty close to 7,500. I think we got within 2 points. And then down here, we got pretty close to the 0 gamma level, which is, this is the gamma flip from positive to negative. But this essentially tries to show you that 3D chart. That's the curvature that this thing is trying to show you. So for instance, there's times when I like a gamma chart influence. So for instance, a gamma peak, let's say the 7500, and maybe there's a volume profile around there, or a swing high or a swing low around there, or a sweep. I always like the confluence, and which is why I say I'm kind of like a discretionary trader. I don't have one specific entry model that's consistent. I often use a few things that give me confluence, and from there I decide, hey, is this a good enough trade for me? Can I enter? Is this like a good enough probability trade based on the confluence that I'm seeing? Yeah, like I can go back. This is yesterday's chart, by the way. And you can kind of see there's like an obvious influence here, right? At 75.70 yesterday. And that, I believe, was a gap fill, if I remember correctly. Yeah, 75, I think 75.72 would have been the gap fill. And 75.70 was like this high here. And then, and just like, look at where we bounce, right? It's like, is it a coincidence? Sometimes it is, but I like the confluence. So bounce off the gamma peak, reject the gamma trough, and from there, kind of mess around here. Because it is a gamma peak, it's hard to run through a gamma peak. So it kind of chops around there for a bit and then finally goes. And I think Alma was saying 75.30 was very sticky and very magnetic. But yeah, now you can start seeing why I'm a huge fan. And this was yesterday, right? Why I'm a huge fan of using like the gamma charts. And again, you can kind of see it here. This wasn't perfect, obviously. Yeah, you can have higher probability and confidence, but nothing works 100% of the time. And I would say definitely trade the edge that you have and confluence. So you have to find a few other things. Like I can't trade off of Alma's levels by themselves, and she gives levels. I need to see something there. If it's a gamma peak, a gamma trough, great. If it's volume profile, great. If it's a sweep, great. Like, yeah. This is why I like confluences, but that's just me. I know a few other guys, they have very specific entry models and they don't deviate from that. And the reason why they don't deviate from it is because they know their stats. It's like, I'm a 60% trader with this stat, and I trade 2R every single time, regardless. No FOMO type of thing. And they do well. And it works. Then I have like a few other guys that just like knife catch, whether you're on the long side or the short side, and knife catch, like for instance, that 28,400 level that I pointed out on NQ. This level here, which happens like that was a level. So this is the sweep here, 28,520. Maybe we get a bounce, maybe we don't. But oftentimes a sweep isn't enough. And I normally look for a volume profile level. And that happens to be a local, like the nearest high value node from that liquidity level. And I think it was This was from June 9th. That was the low of June 9th. Some people, and I used to do it all the time too, until I got killed enough times, is just buy this dip. But on NQ, that's 100-point loss, right? So there's a spot where it's worth taking a shot, and this is the area right here, taking the shot from a volume profile perspective. Is that the monthly? No, it's actually not the monthly. Let me blow this up here. Just excuse all the drawings because it's a mess. I haven't cleaned it up, and I probably should clean it up. But it's the anchored volume profile. So let me see if I can find it from a drawing perspective. Yeah, so under the forecasting or measurements section, where you normally measure like long and short positions here, you can see anchored volume profile. And I anchored it back to, what did I anchor it to? Yeah, I anchored it back to April 24th. And it's arbitrary. Like, you can anchor it to whatever you want, right? But I wanted to make, so initially I was anchored to maybe around May 8th because most of the price action was within there. But once we went low here, once we went to about on June 9th, once we went lower, I had to move my anchor so that I pick up some extra volume to generate the volume profile level. And there's nothing to the left of it. So whatever you see here is generated by these days specifically, right? So yeah, there's like certain areas where you, and some people wait for a high value node. Others might wait for, yeah, some people might wait for the edge of a node. So for instance, I had this edge of node drawn out way back, and you can kind of see why I call it the edge of a node, right? Hang on, let me hide the other garbage. Hide indicators. So this is the edge of a node. You can kind of see like the volume just drops off here, right? So I just drew that in, and you can kind of see the influences that, like, we're pretty darn close to it here. You can see us bounce here. We're kind of respecting it here. And then over here, we just bounce right off of it. So that's your edge of node. And then the top side, here's your high end of the node, right? This is your other edge of node, and look at how well we respect those levels. Over here, there really isn't much of an edge. Like, if you entered anywhere between here, you know what your stop loss will be. But it's also good to like have some sort of candle formation that you might like, right? In order to enter. So that way, like, I don't know if you like a 1 minute entry, a 5 minute entry, a 3 minute entry. It's up to you. All that is so personal. Like, I can't tell you how to trade. No one can, right? Someone can preach all they want about how something works, but it might not work for you and how your mind works, right? And trading is so personal. So I'm just more or less saying what I use and what I prefer to use. Yeah, do you see this? Ever since 11:30, you see that influence? That's the XYLD trade. Like, I was thinking, hey, if we pulled back If we pulled back between like 10 and 11, maybe 11:15, I would consider a long, but it is what it is. Like I'm not doing anything today. I missed a number of trades, and part of it is just because I've been explaining this stuff and I'm watching the charts less, but that comes with streaming, so I'm not too worried. Yeah. Yeah, sorry about that. Yeah, but there's the XYLD trade playing out. And in theory, it should be bullish up until like about 1, or until it hits some sort of oh shoot, my gamma chart, I just realized that I'm not on the latest. So there's a reason why the daily works and the intraday works less, in my opinion. Or not works less, but I don't follow these lines as much on the intraday because positioning changes so frequently on the intraday. So the daily positioning, and this is something that Vol Signals had said one time, and he had said that market makers, the daily level that you see is the daily level that market makers see. When the intraday positioning comes in, so let's say you and I, any other fund, to start taking trades, oftentimes it might only happen for one market maker, and there's many different market makers. So if there's many different market makers, a lot of them are still showing the daily positioning, which is why the daily levels tend to work. And works throughout the day, even though new positioning comes in. Let me research SQILD and QILD. I had no idea about this. But yeah, do that. I think I've done it a few times. I only took the parts that I really that really mattered to me. So I have no idea who the fund is. But screenshot this. Give me 1 sec here. I'm gonna see if I can screenshot this for you. Give me 1 sec here. So this is like the little, this is from Claude, but I had entered some of like the transcript, or maybe it was like a paragraph that was written by Vol Signals, but I had entered that and I just threw it in Claude, and this part was like the most valuable part of what was written, but you'll have to research it a bit more. I'm definitely not I definitely don't know it all. I'm still learning myself. But yeah, take a screenshot of that, and then see how that relates to what you learn about XYLD itself. Do your own research. No problem. Where are you from, by the way? Also, I'm not sure whether to call you Nihon or Jin, or Nihon Jin. And I could be butchering it, so I apologize for that. And I've said the same to Koshik. Nihon? Okay. Oh, you're from Canada? No freaking way. Which part? Alberta? Ooh, nice. I'm in the Toronto area. We're just like breathing wildfire smoke at the moment. Yeah, it kind of sucks. It was like the hottest day of the year. Or, sorry, it wasn't. I guess it was the day before that was like the hottest day. And then on top of that, the next day had like, yeah, actually it cooled down quite a bit. I think today felt relatively cool. And I can see the sun today. The skies look kind of clear. So I think like the smoke is clearing. Yeah, that's pretty awesome. That you found us. I think Koshik has been with me since March, I'm gonna say. I don't remember, but somewhere around there. I only started streaming this year and it's been really slow. I do not want to create content. I'm not like a big content creator. I just want to, I think for me it was more so just pushing the envelope on my end and testing what I know, and to see if I can explain these things that I know. So a lot of it is just practicing what I already learned, but trying to reiterate it and hopefully help out someone else that might be wanting to learn this. Yeah, I think I saw, it was on social. I saw like a train. I saw a train conductor and he was like stopped there filming, and it was just like massive flames around him. I appreciate that, Neon. Yeah, and then so like, yeah, Koshik, he's from India. And then There was one other dude that used to join every now and then. He was like a dude from Saudi, I believe. And then I think you're the first Canadian that's ever typed anything in the chat. Others that typed didn't speak English or didn't know English as their first language. So they didn't really know how to ask about the GEX and stuff like that. But yeah, I'm doing this like every day pretty much, 5 days a week, unless the markets are closed. I don't create any content on the side. Maybe in the future I might, but for now it's just little trade community that we're working on. And if it like enough people join and they want me to reiterate the same thing over and over, I will eventually have to make some sort of video on it, which I'm very reluctant about. I might just pass them to like a vol signals or something, because he's a market maker. Like he's who I learned from, right? So yeah, and then oftentimes I have this this screen up, whether it be the intraday or the daily. I kind of pass back and forth between the two. And the breakdown by strikes matter to me a lot. And what I like to do is I don't really use the results that much, but it's just a force of habit. But I like to screenshot this thing from a daily perspective. So however the daily looks like. And then I'll zoom into what's realistic. Like a realistic movement for the day. We opened at 74.50 around there. So the straddle was about 50 points at open. So technically the market, the at the money straddle, the market technically priced in a move to 7,500 today and a move down to 7,400. So oftentimes I would kind of give it like 100 points both ways from where we roughly are pre-market. And then I'll screenshot this thing, put it into Claude just for the heck of it, and then ask it to like analyze, just to kind of see what it comes up with. Yeah, no, that's awesome. I feel like you know more than a normal person would about GEX. So you might not be a good example of understanding it. Like I think you understand it because you probably had some exposure to it already, right? But you're right. Like if you watch a vol signals, I think it might be tough to follow. Like, it was tough for me to follow for quite some time. But yeah, like I oftentimes have either my previous screen open, which is the volume, the charts showing ES, SPX, and NQ. SPX matters to me, which is why it's the largest window. And oftentimes I have the straddle shown. Wait 1 second here. Where is it? Yeah, oftentimes I have the straddle shown, which I have to adjust every time the market opens. So as soon as the market opens, I adjust the straddle roughly to roughly whatever it is. Sometimes the straddle is like 20 points. Sometimes the straddle is like 50. So the implied move, if you take a call and a put at the money strike at open. So let's say at 74.50, sorry, at 9:30 in the morning, New York time. I don't trade the straddles. I just track them. I try not to trade the straddles because it's like betting on both directions, and more often than not, the straddle holds, right? And you lose. But there are times when the straddle is underpriced. And at those days where maybe you had like 1 or 2 days of compression and then you have a potential catalyst from news of some sort, it might be worthwhile to take the straddle. But I don't take straddles. Just based on how I read the market, I prefer not to take the straddle. But yeah, there's times when like the straddle was like 30 points and then we ended up going like 80 points for the day. So like on SPX, 30 points is 3K, right? 3K USD. Or sorry, yeah, the straddle is 30. So yeah, 15, you're paying 1,500 per position on each side, so 3K. And then it runs to 80. So that's 8K per position, right? Yeah, which is insane. But yeah, I'm not a huge fan of playing the straddle. I prefer playing, if I'm gonna play, I'll play directional, but most of the time it's futures for me. And I would trade prop firms, my live account, both evals and funded. I try to announce when I'm in trades, but I noticed that I feel a lot of pressure when I do that. So just be wary of that. But both Koshik and I try to say when we're taking trades for the most part, and we take our spanking when we do get one, right? But generally my average is around, my win rate is around like 55% plus or minus. I've seen it as low as 50%. I've seen it as high as 62%. So it generally hovers between like that 55 to 57% mark for my win rate. But what I like to do is explain what I'm seeing. And if there's enough, what happens is, prior to doing this, I didn't speak to myself, right? So I wouldn't be able to, like, it's hard for me to, like, the fact that I'm saying it out loud, it's like writing it down for me. And when I'm saying it out loud, sometimes it clicks and I'm like, I just said 3 or 4 things that are going my way, so I got to take the trade now. So I was like, screw it, I'm going to give it a shot. There's no reason why I can't take a shot, right? And it's a good shot. If I lose, then it is what it is, because it happens, right? If you win, then you're like, okay, great, too, but we try not to get too excited in this channel. Yeah, exactly. When you explain it, you understand it better. Exactly. But yeah, like and you'll kind of notice, like I'll speak about Alma's reports, and if she says, hey, there's like some reversion level, potential reversion level, then I would definitely watch that level and see if we can get a reaction off of it. Sometimes it's like a 10-point reaction. Other times it's like the top for the day, you know? So it's just things that, yeah, that's generally what I'm paying attention to. Draw those levels on those SPX charts and try to find as much confluence as I can. And generally I'm like, I launched the stream at about 9:25, 9:28, sometimes 9:30 because for whatever reason I'm late. And then I run it towards noon is normally the latest, and generally I'm off by like 11:15, 11:30. But I'm still trading, or I'm still watching the charts throughout the day. And still taking trades, and then, yeah. That's awesome. Okay, Nihon. Yeah, hopefully we'll see you back here again. And let me know if you want to see certain things, like certain screens if you do. And yeah, take care. Yeah, have a good one, buddy. Not sure where this wants to go. Like, it wants to go up. Like, I still think we're gonna settle somewhere around there. But the big move is done. And right now we're getting that push up from XYLD. All right, I think I'm gonna cut out too. This is a little later than I normally run this.